emotion trading and how trade management can benefit your account. But this is going to just finish with just these 12 tips that I'm going to be looking at. And first of all, the thing I wanted to say is when you're starting out, first thing you need to understand is you're not alone out there. Your broker, I would say your broker is a very important resource to use when you're starting out. You need to use them as your sounding board, really, as a discussion over your trading strategy. They are professionals, or hopefully they are, if you choose the right ones. So they should be able to help you out in terms of generating your trading strategy, and it will allow you to sort of make yourself sort of a bit more assured that you're on the right track. I think social media is a very underrated tool in trading. Lots and lots of good people on Twitter, for example. I'm quite active on Twitter. I'm not saying that I'm one of the good ones, but hopefully I like to think I am. But there are a lot of good people to follow out there. I would get on Twitter and really follow some of the big traders out there, because they've got a lot of good knowledge and can give you some good pointers in terms of what you should be looking at. And also trading knowledge in terms of what's going on in the markets as well. Is a very useful tool. And obviously using trading sites and forums such as, obviously we're on FXStreet today, use sites like FXStreet, because there is a lot of good analysts go on there and give their ideas, and you can just go through them, and certainly that will help you, I think. But then I suppose I would also say don't try and run before you can walk, really. Basically, what I would say is backtest your ideas if you can. But if you're unable to do this, basically trade on a demo account. Try and persuade your broker, if possible, to trade on your demo account for as long as you can. Even if you end up trading live as well, maybe run your demo account alongside your live account. I would say trading on a demo account, first of all, is very important, because it makes you sort of play around with exactly how the platform works. And it does give you a synthetic view on the market, but you can test out your trading strategy in the safe knowledge that you're not going to be sort of blowing yourself out of the water. So I would certainly do that. And I think that when you're comfortable and you've tested out the demo account enough, then I would say play live in the market with maybe a small amount. Just test the water, dip your toe into because trading live in the market is a different, whole different ballgame to trading on a demo account. Gives you an entirely different set of emotions, and I would say that if you sort of start in very small size and know that you're not going to risk too much if you sort of make a wrong move here or there, and that will give you an idea of exactly how the emotions can affect you in your trading. Now, on MT4, for example, which is the platform that I use at Hantec Markets, the smallest trade size you can use is 1 microlot, which is a risk of about, say, for example, on euro dollar, 10 cents per pip. So even if you're looking for a stop loss of 50 pips, you're only going to lose $5 on one trade. So $5 on one trade with a stop loss of 50 pips, which is actually quite a wide stop loss, actually, when you think about it, especially if you're trading near term anyway. I think that is it's a pretty decent way of looking at the markets. But once you do get comfortable, then you can start to increase your exposure, and you can sort of, as I said, start off in a small size and work your way up, and then you can sort of get an idea of exactly what your level of risk you're comfortable with when you're trading. And I think working your way up to that level is a better way than just sort of blindly just saying, right, well, I'll risk this, that, or the other in my trading, and not actually realize how that affects you when you're trading, because that is a big factor as well. Right. Number 3, give yourself a target. Now, I think it's a little bit of a controversial one, because I think it depends on what sort of trader you are, and it can sort of differ from trader to trader really as to exactly whether this is a good idea or not. But I would say that a lot of traders that I know will use personal targets, and they'll stick to them. They'll sort of set themselves maybe a weekly target that they'll work towards, and once they hit that target, they'll sort of close down for the week. Basically, what you're trying to do is you're trying to get out of the mindset of always being in the market, really. And I think that if you set yourself, say for example, a fixed number of pips or a fixed monetary amount, you can sort of start to be a little bit more regulated in your trading. And but that doesn't necessarily mean that if you go over your target, you shouldn't necessarily have and if you go over your target and you see a perfect trading setup, you shouldn't necessarily trade it. What I would say is if you have hit your target and you do see that setup that you think, wow, that's a really strong setup, then maybe trade in a smaller size. Basically, you're trying to get away from the whole fact that if that trade does go wrong and you then start losing money and you basically go back below your trading target, that would mentally not be great, I think, for you. I think that it'd be good to say, right, yes, that week, bang, hit that target and move on. So I would say that basically if you sort of trade it in a reduced target, reduced size, then you can almost have a free trade at it. So that's how I would look at that. Now, with regard to losses, I would say that if, say, for example, if you're in loss for 1 week, maybe carry that over and add that to the target of the next week. But at that stage, if you run then to a second week of losses, I would then sort of cut that and just put that to one side and say, okay, put that down to experience. Because basically you're trying to, again, get out of the whole system of sort of doubling up and rolling over. Basically because it has could potentially have quite a significant impact on your psychology, on your trading psychology, and you sort of get into the realms of running the risk of sort of increasing your leverage to try and claw back that trade, that loss that you've got, and you sort of end up in a deeper and deeper hole. So once you've rolled over 1 week, I would say fine, done, move on, and just sort of put it to one side and then start afresh, start a clean slate. Number 4, keep a trader's diary. I've mentioned this before, and I think this is actually a very important point, because I think you learn a hell of a lot when you trade, and I think if you write down exactly what's been happening, what's been going on in the markets, you can figure out what your recurring mistakes are, and then you can learn how to cope with them and how to deal with them. You can also see what's working for you as well, because I think obviously not only do you learn from your mistakes in your trading, but you want to see why you're going, what's going well for you, because you want to try and repeat it. So if you keep yourself a trading diary, I think that will help to drive that whole aspect of your trading. The other thing is that sort of looking at the market every day can be very exhausting. So if you keep a trading diary, you can start to learn the times of the day at which you feel or you seem to be more productive. Say, for example, I know a lot of traders who are really good trading in the morning, but then when the US markets open, markets can start to trade a little bit more erratically, perhaps, or maybe their trading setups don't necessarily work so well, and then they've sort of started to notice that they're making more losses into the afternoon. So that might give you a clue that perhaps trading just through the European session would be a good idea, or just in the morning, and then maybe using the afternoon, maybe just to run through your ideas and maybe just to tweak a few things here and there, and just to not be live in the market and constantly looking, because it can get quite exhausting, being constantly alert and watching the markets. So maybe that's an idea as well.